Hello there, this is Victor Santana looking at the weekly chart for stock hunters here. And here we're looking at the ETF of the S&P 500. And we're going to start out by looking at the weekly chart to see what the long-term trend is like. And as you can see here on this chart, each candle representing 1 week of action. You could see we've been in an uptrend here the last few weeks here, 1, 2, 3, 4, 5 weeks in a row. All right, and the red line representing a 52-week moving average. So anything above that is a good thing for long-term investing. And this is kind of our medium trend here, 12-week moving average here. So you can see we're way above in this zone here. Now, do we put money in now or later? And a good question about that is by using the CCI here below, called the Commodity Channel Index. That gives us an idea of where in the market, where we're at in terms of overvalue or oversold. So as you can see here, we were overbought, meaning overvalued, and now it's declining slightly. Now, the best strategy is to buy when it is oversold. Basically, when people are panicking, that's when you want to come in and buy at the dips. So here you have a dip here in this zone here, and then if you look back here, back in April, we had another buying opportunity in this area here, and as you can see, the market just continued on up. And as you look back here and back here, how these cycles work. So doesn't mean once it gets up to this red zone that it can't continue to go up, which it can. As you can see back here, it just continued up from here on up higher. So it's just a means to get the best value out of the market here. Now the point is, as long as it's above this red line, if it continues to go below it, then that's where we just park our money into cash and just wait for entry as far as the market going above again. Again, this is a long-term strategy. So based on that, let's you can see we're way above here and pulling back. So we just have to wait. Of course, you could see that you don't want to be buying these highs. So we'll just move on from the S&P. Now let's go ahead and look at the Dow. Okay, now we're looking at Dow. You can see we're way up in this range. 1, 2, 3, 4, 5 weeks of up move. Looking at the CCI, also telling us that it's way above. We don't want to be putting our money here, so we'll just pass on this. Now let's look at the Qs. NASDAQ, QQQ. You can see also we've been up 1, 2, 3, 4, 5 weeks in a row, and we did have an opportunity to get in, as we discussed in our group meeting 2 months ago. We were right here at this range, and sure enough, it's gone up. So now we're waiting for a pullback and put our money back to work. Now let's look at the Russell 2000, the small caps. We also had the opportunity right here at this area here, and it's gone up, as you could see. Now we're oversold based on the CCI. So we'll just have to wait for the dip for those trading weekly. Now, what you notice here is the 52-week moving average now of all the 4 indices. The Russell 2000 is the weakest. See how close it is here? So this could be just a warning that maybe things could be wearing out, but we've tagged it once and twice. Now we had a double top here, meaning that it equaled from here to here, but this time it's lower. Now it doesn't mean it can't run up for what they call a triple top, but based on this, we just got to keep an eye on it. This may trade down here, down to the red line, for all we know, create an entry, and then continue on up higher. But as always, let the market tell you what it wants to do. Don't impose your will on it. All right, so that's it for now, and keep an eye out for these videos. Take care.